Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 532nd installment of this program. Traders, lots to talk about. This is January 7th. This video is being shot on Thursday night for Friday's trading, January 8th, 2010. What I would like to say is this. Flags are flying all over the U.S. futures markets. There are bull and bear flags all over the place, traders. For you traders who may not know what they look like, let's look at the board right here. That illustrates a bull flag where you have a series of days that go up, up, up. Then suddenly you get this consolidation downwards and you can just about get a parallel channel out of it. That is a bull flag, and the market would usually break out from there. So bull flags, market breaks up, of course, right? Then we have lots of bear flags out there, and a bear flag is basically the opposite. Market starts to run straight down, suddenly puts in this sideways to upwards consolidation, which looks very much like a parallel channel, and from there you should break down. That's a bear flag. We have lots of them in the U.S. futures markets, and I'm going to show a few of them to you because collectively they do create a picture. Tomorrow is the big day this week that the Fed releases employment numbers, right? The government releases employment numbers. The whole week, everyone's been hinging upon these numbers, and the work that I've done, the technical work tells me these numbers are going to be bullish, and it tells me that certain markets will go up and others will go down. If, in fact, the market or the numbers come out bullish tomorrow, you should get stocks to move higher, dollars to move higher with the stocks, bonds should go down, currencies should go down, and gold and metals should go down if the number is large. You know, if the numbers are bullish as can be, which is what I think they will be. Now, again, you have to have a technical picture to tell you if any of this is going to happen. I don't know what the numbers are going to be. And traders, I don't even know if the numbers are real. How can any of us know if the numbers that get released from the government are real? There's no way to know this, right? They didn't call me and ask me if I've laid anybody off. I bet they haven't called you either. How do they really know what the actual figures are? Well, no one knows what the true numbers are, but the only numbers the world gets to trade off of or what the government releases. So it doesn't matter if you think it's a lie, if you think it's a fake number, the government's lying, I don't believe it, unemployment's higher. None of that matters because it's all we have to trade off of are those numbers. So you have to trade them for what they are. It doesn't matter what you think about them. So keep that in mind, traders. No one knows if the numbers are real, but this is what we get to trade off of, and the world will use them. So trade what you see and not what you think when these numbers come out. All right. We have trading plans certainly in place for when the numbers come out. We'll probably be in the markets long before that ever happens. We are looking at a few things. We're also looking at a shift from small cap or tech stocks, I should say, back into brick and mortar. Traders, the analysis I've been doing for the past week since this year began, 2010, shows me the NASDAQ pointing slightly lower or the high-tech stocks. Traders are bailing out of those and bailing into the brick and mortar. That tells me that this rally that we've had is gaining legs and is broadening. They are no longer trying to jump into the fast stocks. They're looking to get back into brick and mortar, traders. Another thing that tells me that this report is going to be bullish. I think that that's exactly what's happening in the analysis, whereas the last few days I've actually been able to tell my OMNIACs NASDAQ looks almost like a sell while S&P looks like a buy. That doesn't usually happen because NASDAQ and S&P run together. When does that happen? When fund managers start shifting out of high-tech or low-cap stocks and into brick and mortar. Broadening of the rally. That's what I'm getting out of the analysis that I've done. So let's review. Flags all over the place, and we're about to go look at them, and a shift out of high-tech, small-cap stocks into brick and mortar, or S&P getting more buying now than NASDAQ was getting. At least that's what's happened this week. Traders, with no further ado, let's go look at the charts. Okay, traders, the first chart you are looking at is the Euro currency daily bar chart. This is the March 2010 contract. On this daily bar, this is clearly a bear flag, just like the one I illustrated for you on the whiteboard a moment ago. Bear flag, whereas the market drops down, 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 puts in this sideways to upwards consolidation where you can get a parallel channel out of it. Then you expect a breakdown. Interesting. Report coming out Friday morning. On Thursday night, you're at the bottom of a bear flag, testing the support. Likelihood of breaking it is high if, in fact, the report comes out where there are more jobs, or less job losses, of course, but more jobs created. So we have a bear flag in euro currency. That would be one of the markets that would go down if, in fact, the US dollar went up, right? So let's build this picture. Euro currency, bear flag. Let's look at the next chart. Okay, traders, the next chart you have before you is the April gold daily bar chart. Once again, I see a bear flag forming here. We jumped out of it on Thursday's trading, came right back down on Thursday evening, and was sitting down here. Bear flag. Gold would go down if the dollar would go up, right? Euro currency would go down if dollar goes up. Well, both of those are in bear flags right now. I find that interesting. Now, bonds is another market that if that's in a bear flag, that means the markets that should go lower against the dollar going higher all have bear flag setups. Let's go look at bonds. Okay, traders, you are looking at the 30-year March T-bond contract here. I have shown this to you many times. We've played this chart many times. You had a big head and shoulders, then a run-up, and a test of the head which failed, told us it was going to be more bearish. That morphed into a second head and shoulders, and boom, we dropped down as expected, and now we've put in a bear flag. So that means gold, euro, and bonds all have bear flags. Right off the bat, that tells me that the number tomorrow is likely bullish for US dollars. So bear flag in the markets that would trade down if dollars traded up. And again, a strong report would mean dollars would go higher. Bear flag in bonds looks like it's going to probably move lower if, in fact, it is done with the bear flag. Bonds are sitting right here, right now, underneath that bear flag. Now, traders, let's go look at US dollar index. Okay, traders, the chart before you is the US dollar index daily bar chart, and lo and behold, a bull flag, baby. Yes, just what you'd hope to see if, in fact, those other markets that trade against the dollar are bearish. Bull flag in the dollar, once again telling us the likelihood of the employment figures being favorable towards the upside of the dollar is in place. What does that mean? That means if employment figures come out higher, there are more people employed, we are getting closer and closer to the time where the Fed's going to have to raise interest rates. Bonds go down when interest rates get raised. Dollars go up when interest rates get raised. Something's going on here, traders, with these flags. Bull flags and anything that thinks the market's going to, or the interest rate's going to go higher, you have bull flags. The markets that would be bearish if interest rates went higher have bear flags. Something's going on here, right? There is certainly a picture being painted. So traders, there you are. This is the picture that I have found. Of course, I looked at many other currencies this evening and many other markets and many indicators. But what struck me was the bull and bear flags opposite one another the night before the report. If that truly is a bull flag, the report's bullish for dollars tomorrow, bearish for currency, euro currency that is, and other currencies, bearish for bonds, and likely bearish for metals. But metals do have a play in them. There's so many gold bugs out there that the TA might not even work. The technical analysis might not even work in the gold, because gold, the buyers just keep coming out of the woodwork. But from the work that I'm looking at, and I'm a technical trader, we're going to get a good report tomorrow, which is going to be strong dollars. What happens to the other markets usually is opposite of where the dollars go. All right, traders, so now you've seen my little technical argument for the employment report tomorrow coming out favorable towards stocks. Let's go look at some stock charts now. Okay, traders, what you're looking at right here is the Emini S&P daily bar chart. We got above a major resistance plateau. It is now support. The support's been tested. We have rallied out. That picture right there is a picture of a market that looks like it wants to go much higher. Clearly, that's a formation that wants to go higher. You've been moving solidly higher. Again, you got above your resistance. It's now support. Indicators are mixed, but more bullish than bearish. I like the S&P. Very interesting, however, that if you look at a NASDAQ chart, it doesn't look nearly as bullish. Once again, proving to me that the brick and mortar stocks are starting to get more buying in them, and they're rotating out of the high-tech stocks and the small cap stocks. So again, how do we qualify that? Well, if the Dow Jones Industrial Average and the S&P look bullish, but the high-tech averages look bearish, that would certainly make that picture make sense. So there it is, S&P looking bullish. Let's go look at the Dow right now. Okay, traders, we are now looking at the Dow Jones Industrial Average daily bar. Like the S&P, got above a major resistance plateau, now holding support well inside of a parallel bull channel, tested the bottom of the parallel channel and the support on on Thursday. It tested right there, both lines, held and rallied out. This looks like it's poised to move higher. So the brick and mortar averages, the S&P and the Dow Jones Industrials, are showing great strength. Let's go look now at the NASDAQ. Okay, traders, we are looking now at the NASDAQ daily bar chart. This is the March contract. And as you can see, it's slightly rounded top, having difficulty moving higher, dropped lower on Thursday. This is not nearly as bullish looking as the S&P nor the Dow, but it still has put in new highs for the year, for last year and this year. So it is looking really, really good right now. However, the fact that it's sort of rounded and it looks like distribution compared to the S&P, which does not look like distribution, I say that's a rotation out of NASDAQ into S&P. That is a broadening of this rally, traders. Pull your charts, do your own homework, look at your indicators, and look at the charts I've just provided for you. Remember, flags flying in the indices, in bonds, in gold, they're bearish. Bullish flag in dollar index. Then you have the NASDAQ versus the S&P. High-tech stocks seem to be being rolled out of, and we're rolling into S&P brick and mortar stocks. I like what's going on here, traders. Putting my neck out on the line and saying that the analysis we just seen here tells us that the report will be bullish for stocks tomorrow. Let's see what we get. So, traders, you've seen those charts, traders. I'd advise you, if you are one of my fans, to back this tape up, back up this video, and listen to that chart segment again. A lot of important information in there. You've seen what those flags look like. You see that they're in place. But I'd like to say this, traders, do not get overzealous here. What can happen? A really bad report tomorrow could smack this market straight down, and everything that I just showed you goes out the window. That is what stops are for. A stop is your best friend. So no matter what you do tomorrow, make sure your stops are in. Put them in first. Yes, the technical picture says the report's going to be bullish tomorrow. Yes, we have bear flags in the markets that would go down if it's a bullish report. Yes, we have bull flags in the markets that would go up if it's a bullish report. Problem is, what if it's not a bullish report, right? So put your stops in, because no one ever knows what's going to happen here. But that's my take. Our orders will be in. The OMNIACs will have their orders in place with their stops. OMNIACs, we're also looking at a corn trade, likely on the downside. Take a look at the site. Make sure you see the corn recommendations. We're looking to trade euro currency and indices tomorrow, as well as some grains. So let's see what shapes up. Again, traders, a quick recap. Flags flying all over the place, and a shift out of small cap tech stocks into the brick and mortar. If that's the truth, broadening the horizons of this rally, which means it will continue on through at least this first quarter, and I think it will, but we'll see what's going to happen. Once again, neck out on the line, traders. The analysis I showed you tells me bullish report on Friday morning. Let's see what we get. Make sure your stops are in. Make sure you do your homework and be at the website and be in our chat room so that we can see this together. Traders, if you'd like to join us tomorrow, come on down to www.livewithoscar.com. Jump into the free chat rooms. And as I always tell you, give me a buzz anytime, Darren, at 702-629-4755. All right, traders, get ready. Friday morning is going to be interesting. Keep your emotions out of trading. One of the best things I can do to help you with that is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Subs are in! Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.